Alright, gang, it's your boy Nature, aka Nature. Alright, so now we went over all the basic Japanese candlestick patterns. Like, the basics were like spinning top, doji, marabozos. We're going to dive in a little more on a few more single candlestick patterns. But the basics are really like spinning top, dojis, and marabozos. So it's a few more single candlestick patterns that we got to go over. We already went over it, which is inverted hammer, hanging man, and shooting star. But we're gonna go over them again. So all right. So we combine all the candlestick analysts, with support and resistance levels, and I'll show you guys how to look at support and resistance levels, and we make the best results and decisions off of the after we combine all our candlestick analysts and we look at our notes and trades, and we even look at the news. So then we are able to make the best results. Fibonacci, some use Fibonacci. Fibonacci is good, shows you your ratio. Like as far as like trading, so like it shows you like the ratio from one how much ratio it will be from this point of, like, if say the trend started at the bottom, it'll show you the ratio from the trend starting at the bottom to where like it ended up at. So it'll show you like the ratio and the percentage. So we're gonna learn more better about that too, because I like Fibonacci, and it's a retracement and extension tool. It's a retracement and an extension tool that we use in the market to help us better know where the levels will be at when we place a buy or a sell order. So and also for our take profit, it shows you all that. It shows you your take profit level and how much money you'll make off your take profit. So this is, Fibonacci is also a very important tool. I'm gonna actually do a whole video about that. All right, so gang, I just want to let you know what's going on. Keep y'all updated what's going on. So everything's good. So I just wanted, let's go, just dive straight in and go right into inverted hammer. So all right, so this is an inverted hammer. Um, Actually, yeah, we can do inverted hammer first, and then we could do hanging man. It doesn't matter. So inverted hammer, um, it's an inverted hammer because the pattern after a downtrend is usually taken to be a trend reversal. So inverted hammer looks like an upside down reversal of a hammer side pattern, and it appears in an uptrend. It's also called a shooting star. So a shooting star and inverted hammer is the same thing. So this is what an inverted hammer looks like. Um, it lets you know that buyers are taking control. Buyers were in control, and sellers closed, but it wasn't a lot of sellers because the body was closed. It's a small body, so that indicates that sellers were there wasn't a lot of sellers. It also appears during the uptrend, so it's also called a shooting star pattern, inverted hammer, shooting star pattern. So you usually do see these during the uptrend. I'm gonna actually let's actually click on this right here and read more about it. Hold on. See what Wikipedia got. So an inverted hammer is a type of candlestick pattern found after a downtrend, and is usually taken to be a trend reversal signal. The inverted hammer, that's what I thought. Hold on. I just want to make sure real fast. Like, an inverted hammer is what I thought it was. Like, I know it is. An inverted hammer occurs falling, suggesting that a possible reversal is coming. So it has a long upper shadow, and it shows that buyers try to bid the price higher. However, sellers saw that the buyers were doing and said, "Oh, heck no," and attempt to push the price back down. Fortunately, the buyers had eaten enough their Wheaties for breakfast and still managed to close the session near the opening. So an inverted hammer, since the sellers weren't able to close the price any lower, this is a good indication that everybody who wants to sell has already sold. And if there are no sellers left, then there are buyers. Buyers will come in. So like inverted hammer looks like an upside down version of a hammer, a candlestick pattern. It's a hammer. You know, it's a hammer and then an inverted hammer. So inverted, we're going to also go over hammer candlestick pattern. So the inverted hammer is just a hammer. Cause usually a hammer, you'll see the body, you know, at the top, and then you'll see the wood at the bottom. So it's an inverted hammer. So the hammer is facing upside down. So it looks like an upside down hammer, and it's called an inverted hammer. And when it appears in an uptrend, it's called a shooting star. Okay, so but you know you'll find this after a downtrend usually, and it's a trend reversal signal. But you also might find it on the uptrend, and you find it on the uptrend, which you will. You'll see all these patterns, like especially inverted hammer, shooting star. You'll see these patterns a lot. So when you're usually going to see this, and I do see this in the market recently, I see it a lot in the market, a shooting star forming during an uptrend. So it's called a shooting star. So let's see also what they say. This pattern is made up of a candle with a small lower body and a long upper wick, which is at least 2 times as large as the short lower body. The body of the candle should be at the low end of the trading range, and there should be little or no lower wicks in the candle. The lower upper wicks of the candlestick pattern indicates that buyers drove price at some point during the period in which a candle was formed, but encountered selling pressure, which drove price back down to close near where they opened. When encountering an inverted hammer, traders often check for a higher opening and a close on the next period to validate it is a bullish signal. So we always look for, even though it's a reversal pattern and it's a reversal signal, the inverted hammer is and you see on a downtrend, it's a reversal pattern signaling that a possible reversal to the upside is coming. We have to look for some type of green candlestick to form after that, so we actually know to get in. Because just because you see a reversal pattern doesn't always mean the market can do whatever it wants. You know, it doesn't mean that it will actually just do that. You know, and actually just reverse back up, even though you see that reversal pattern. We have to wait for some more confirmation. So we have to look at everything. We have to look at technical analysts. We have to look at the news. We gotta look at, you know, everything, the trend, to see if it's an uptrend, a downtrend, support level, key levels, everything. But you know, so we know we need to understand the basics though. So this is an inverted hammer. We need some type of bullish. Bullish means is green. Bearish means is red. We need some type of bullish green signal, meaning that, you know, a long Marabozal green candlestick, bullish candlestick, or a bullish engulfing candlestick that shows that that price wants to go back up. So we need some type of validation before we just get in that signal. Also check out shooting star. We also gonna go over shooting star, because shooting star is the same thing as an inverted hammer, but it forms during the uptrend. So let's go over that. Then we're gonna go over hammer and in this video too. So we're gonna go over hammer, inverted hammer, and shooting star. So hammer is the opposite of inverted hammer, and we're gonna go over that too real fast. So I already went over this. You guys already have this on my OnlyFans, but we're just gonna go over it one more time for y'all. So alright, so let's go to shooting star real fast. So shooting star is an inverted hammer, but shooting star is shooting up. So a star, so it's going to be formed on an uptrend. So uh, this is all technical analysts what we're doing right now. So a shooting star is interpreted as a type of reversal pattern. It's a reversal pattern. All these like are reversal patterns. Um, so it looks identical to the inverted hammer, but it occurs when price has been rising. Um, the shooting star looks exactly as the inverted hammer, but instead of being found in a downtrend, it is found in an uptrend, and does have a different implication. Like the inverted hammer is made up on the candles with small lower bodies and little or no lower wicks, a long upper wick that is at least 2 times the size of the lower body. So shooting star pattern are found in the uptrend. So the only difference between an inverted hammer and a shooting star, even though they look exactly the same, is that the shooting star will be found on the uptrend and the inverted hammer will be found on the downtrend. So a long upper width of a candlestick pattern indicates that the buyers drove price up at some point during the period in which the candle was formed, and the counter selling pressure was drove price back down to the period to close near where they opened. And this occurred during the uptrend. The selling pressure is seen as a potential reversal signal. After encouraging this pattern, traders often check for a lower opening on the next period before considering a sell signal validated. So as well with the inverted hammer, most traders will see a longer wick as a sign of greater potential reversal and is likely to see an increase in volume on the day of the shooting star form. So yes, it occurs during when price has been risen, and it looks exactly identical to an inverted hammer, but the inverted hammer is formed during a downtrend, and you know its shape indicates that price has opened at opened up at a low and it has rallied back down to the bottom. This means that buyers are attempting to push price back up, but sellers have came in and have overpowered them. So this is they're all reversal pattern. We have to also look to see this is like I said, inverted hammer. Oh, let's go to hammer candlestick pattern. We also have to see what price wants to do after we get a reversal pattern. Even if it's a bullish or a bearish engulfing. We have to see what price wants to do after that. So let's go over hammer. That was hammer. That was inverted hammer and shooting star. So I hope that helped. A hammer is a type of bullish reversal. This is also a hammer. So a hammer is a type of bullish reversal candlestick pattern made of just one candle found in the price of a financial asset. The candle looks like a hammer as it has a long wick sticking out at the bottom and short body at the top of the candlestick with little or no upper wicks. In order for a candle to be valid, a hammer, most traders must say that the lower wicks must be 2 times greater than the size of the portion of the candle, and the body of the candle must be at the upper end of the trading range. When you see a hammer form in a downtrend, this is a sign of a potential reversal in the market, as a long lower wick represents a period of trading where the sellers were indicating in control, but the buyers were able to reverse that control and drive price back up to the close near the high for the day. Thus, the short period is the short body at the top of the candle. After seeing this chart pattern form in the market, most traders will wait for the next period to open higher and then close the previous period to confirm that buyers are actually in control. Two additional things that traders will look for to place more significantly significant on the pattern are long lower wicks and an increase in volume for a time period that is formed in a hammer. So a hammer body is 3 times shorter than the shadow. So they're not really like a hammer is basically it forms on a downtrend. It has its name. It's a bullish reversal pattern, meaning meaning this pattern forms on a downtrend, meaning it's a bullish. It's just like in the inverted hammer. It forms on a downtrend. It'll just be sticking up. On the downtrend, on a hammer, you can see that the wick is a hammer because the wick is sticking out. It's hammering out at the bottom. On a downtrend, you'll see it hammering out on the bottom of the downtrend. you'll see it like you'll see a long wick, and then you'll see the body hammering out on the downtrend. Unless you know that's a hammer, it's a possible reversal. It's a bullish reversal, meaning it's an uptrend reversal pattern that forms during a downtrend, and it's called a hammering because it's hammering out at the bottom. When you see this price has been falling, and a hammer signals that a bottom is near and that price will start rising again. So it has a long lower shadow, indicates that sellers push lower, but buyers were able to overcome this selling pressure and close near the opening. So I just want y'all to be familiar. These are really it for all the single candlestick patterns. Let me just check again, just double check and make sure those are all the candlestick patterns that you should know. Like as far as single candlestick patterns, I think I went over all of them, so that's good. Let me just go over all of them. Okay, let me see. Okay, yeah, so we have spinning top, doji, maribosa. We went over that. Inverted hammer, we just did that. Hanging man, or which is hammer. We just did that. And shooting star, we just did that. So, actually, hold on, because hammer is, we did hammer, we did inverted hammer. Okay, so let's do hanging too. Let's just do hanging. It's a hanging man. It looks like, so we got inverted hammer and shooting star. They're exactly the same. And you got hammer and hanging man. That's the last single candlestick pattern we gotta do. I have to show y'all real fast. Is hanging man. See, hanging man and hammer. They look exactly the same as the hanging man and the hammer are both candlestick patterns that indicate trend reversal. They look as the only difference is that a hanging man forms during an uptrend, and a hammer hammering out at the bottom forms during a downtrend. So it's called a hanging man because if a pattern appears in the chart with an uptrend indicating a bearish reversal, it's called a hanging man. So it's a hanging man when you you think it's a hammer on an uptrend, but it's called a hanging man, and it's actually not a bullish reversal. That's a hammer. It's a bearish reversal, meaning that sellers want to come in and to the downtrend and make a downtrend, and it appears to be a downtrend now. So it's a bearish reversal. I just want to let's understand what a hanging man candlestick pattern is. Cause I forgot. Hammer and hanging man look identical. They're actually like the same, just like inverted hammer and shape. They have slightly different meanings because one is formed on a hammer is formed on a downtrend, and a hanging man is formed on an uptrend. So let's just dive in a little more, okay? So you know the difference between a hammer and a hanging man. So just because you see a hammer form on a downtrend, though, doesn't mean that you automatically place an order. You need more bullish, more green candlesticks to confirm before you pull that trigger. You know, before you get in that for that trade, that sniper entry. I want to show you how to do all that. A typical example of a confirmation would be to wait for a green candlestick to close above the opening to the right of the hammer. So once you see a hammer, just don't get in. Wait for you to see a green candlestick to form, and then get in. Same thing with the hanging man. The hanging man is a bearish reversal pattern that also marks that the top of a strong resistance level is coming up near, and that price is rising, and that the formation of a hanging man indicates that sellers are beginning to outnumber buyers, and that it's a reversal pattern that sellers that are coming in. It's a bearish reversal pattern. So the long lower shadows show that sellers push price lower during the session. Buyers were able to push price back to some point only near the opening. This should set off the alarm, since it tells you that buyers were left to provide, that there weren't no more buyers left to provide, and that the necessary momentum to keep raising the price and keep raising the price, and that sellers were coming in. So it has long lower upper shadows, which is about 2 or 3 times the real body. Little lower, no upper shadows, the real body at the time. And the color is really not important. If you see it on an uptrend, it's called a hanging man. If you see it on a downtrend, it's called a hammer. So Um, so let's just go in and read this. So let's just reading more about it. The hammer man, hanging man is a type of candlestick pattern that displays on the high and low opening and closing period price security for a specific time frame. Candlesticks reflect the impact of investors' emotions on security prices and are used by some technical traders to determine when to enter exit trades. The term hanging man refers to the candle shape as well as what appears on this pattern infers. The hanging an asset solely based on hanging man pattern is a risky proposition. Many believe is a key because we have to wait to see some more confirmation. Many believe it's a key of evidence that market cements is beginning to turn. The strength in the uptrend is no longer there. So it's a reversal pattern for an uptrend that downtrend is occurring. So a hanging man occurs when two main criteria are presented. The asset has been assessed during the uptrend, and that the candle has a small real body distance between the open and close lower shadow. There is little to no upper shadow. So given these two criteria, when a hangman forms in the uptrend, it indicates that the buyers have lost their strength, while demands have been pushing the stock price higher. On this day, there was significant selling, while buyers managed to bring the price back up to near the opening. Initially, sells off and indicated that growing numbers of investors think that the price has peaked. For believers in candlestick trading, the pattern provides an opportunity to sell existing long periods and even go short in anticipation of price decline. So hanging man is characteristic by small bodies on top of a long lower shadow. The shadow beneath should be at least two times the length of the body. So this is the body, the square is the body, and the long lower shadow should be two times or twice the size of the body, which it is. So that's how you know it's a hanging man pattern, forming on the uptrend. So this tribal patterns in Facebook stock both lead to short-term move lower in price. Yeah, you can trade stocks on Forex too. We can trade Tesla, Bitcoin, Facebook, any stock. I don't really technically trade stocks, but it's the same thing. I want to show y'all that too. Long-term direction of assets were affected as a hanging man pattern are only useful for gauging short-term momentum and price changes. So, boom, as you can see in this picture right here, the hanging man forms during the uptrend. Boom, during the uptrend, hanging man forms, small body. The wick is two times the size of the small body. Boom, hanging man. Boom. Okay, boom, reversal. Went dropped down. It finally went up, and then it finally dropped down. Reversed it back down. Same thing here. Boom. It shows another one at the top. Boom. Okay, so all right. So we have to wait to see some type of confirmation. So price went all the way up on the second hanging man on the uptrend. Price was still going all the way up before it actually reversed back down and dropped back down to the downtrend. So we have to see some more confirmation, but it does. The hanging man does form during the uptrend, and you will see this. You will see all hammer, inverted hammer, shooting star. You'll see all these single candlestick patterns form, in the market. So it's important. These are all the basic candlestick patterns that we went over. So I went over all of them with y'all in this video. In the other videos too, we went over all of them. Went over all like the single candlestick patterns. So even though traders often count on candlestick formation to detect momentum in an individual stock, it's also appropriate to look for candlestick patterns after that to form to actually make that trade. So it forms during the downtrend. Forms during the uptrend. Trading a hanging man pattern that has above volume long lower shadows and are following by a selling day. It's an indication. It's a reversal pattern that forms during the uptrend that signals that it's a reversal pattern that a downtrend is coming. Selling day has the best chance of result in a price movement lower. Therefore, it follows that these are ideal patterns to trade off of. So, upon seeing a pattern, considering initiating a short trade near the close of the down day following the hanging man, and a more aggressive strategy is to take the trade near the closing price of the hanging man or near the opening of the next candle. Place a stop loss order above the high of the hanging man candle, and then the following chart shows the possible entries as well as stop loss. So they picked their stop loss. They got in the trade. They entered the trade. Um, they exit. So stop loss right above the last hang. Exit as price moves higher. So if in this example, um, if price moves higher, they exit. So one problem with this candlestick that they don't provide price target. Therefore, it stays in the target. It stays in the trade while the downtrend momentum remains intact. But get out when the price starts to rise again. So you see a hanging man, aggressive trading might get in, get some money real fast. But as soon as you see price start rising again, get out. All right. So that's basically what they're telling us to do. So a hanging man pattern are only short-term reversal signals. So these are only short-term reversal signals. These aren't like, I guess that's why they call them single candlestick short-term, because short-term, double and triple candlestick patterns probably are more, and they sound more effective or more, longer term than, the single candlestick patterns. So, they're telling you to get out the trade once you see momentum rising again. A question of reliability. If you're looking for any hanging man pattern, is only a mild predictor of a reversal. Look for a specific characteristic to become a much more predictor. Okay, so we need more confirmation to understand, the difference. So a hanging man occurs. Bottom line, hanging man occurs frequently. If you highlight them all on the chart, you will find that most are poor predictors of a price move lower. Look for an increased volume, a sell-off at the next day, or a long lower shadow, and the pattern to become more reliable. Utilize a short loss above the hanging man high if you are going to trade. So, all these patterns are, we need more confirmation to get into any of these patterns. That is along shooting star, that is along spinning top, doji, marbozo, inverted hammer, hanging man, or shooting star. So those are all the single candlestick patterns, Japanese candlestick patterns that you should know. It's spinning top, doji, marbozo, inverted hammer, hanging man, and shooting star. We already went over all the double candlestick patterns that you need to know, which will be bullish and bearing, engulfing, and tweezer top and tweezer bottom. So the next step is just to do triple Japanese candlestick patterns that we need to go over, which is head and shoulders, inverted head and shoulders, which is morning and even star. So we're gonna go over that in our next video. I'm gonna go over triple candlestick patterns, but these are all your single candlestick patterns. So we use all these, combine these candlestick analysts with our support and resistance level, with our trend, Fibonacci, moving average, and we use all. We go to tradingview.com. Like I said, tradingview.com. Let's go to tradingview.com real fast. We use all the best, ideas and indicators, technical indicators. We can get ideas. I go on here because there's also a lot of other, like, you can get trading ideas for free on here on tradingview.com. So once you know how to combine all your candlestick analysts, you know how to analyze candlestick patterns and single candlestick pattern, double candlestick pattern. We also go on here on tradingview.com and get trading ideas for each pair. You just type in your pair that you wanted. So let's say if I wanted a trading idea for gold, I would type in XAU USD. So gold / over USD. So gold will pop up, and I will just go to ideas right here. And these are frequently. They post every 16 hours, every 12 hours, every hour. So this is 23 hours ago. They're saying gold plan to go up this week. So like, um, some people say it's planning to go short. So we have to look at, all the analysts, and actually when we get into our live trades and stuff and start showing you all some live trades, we'll see how we have to, how I do it and how I make my trades. So, this is how I make my trades. So, we combine everything together, and, this is how we come up with, um, how we're going to trade, and how we're going to make our profit. This is how we get the best results, and, we get the best take profits, no matter if we're buying or selling. So, all right, gang, it's your boy Nature, aka Nature. Gang.